Cash flow fourth question. So this fourth question is from Dushen PLC. And yes, these are two books. Each book have 25 questions in each income companies and the cash flow statement. So with answers, answer book, and also you can check the explanations for my YouTube channel. I will upload all 50 explanations for those two books in through my YouTube channel, right? So this is likewise in third question. These companies started on opening date, so which means there's no any opening balances, just only closing balances, right? And all sales and purchases were made on credit basis. So from that you have to get the idea there is no any cash sales or cash purchases, only credit sales and credit purchases, right? So from the credit sales, it's incurring the debtors, and from the debtors you have to find out debtor receipts. The cash flow that relevant to the debtors is debtor receipts. And in creditors, so when you're doing the credit purchases, it's incurring the creditors. So from the creditors, you have to find out what creditor payments, right? So in this case, the sales is appeared in the income statement directly, 18,500 and 18,500, and there is still a payable that from the debtors to the company, 1,850 that appeared in the SOFP. So which means within the year, we collected 16,650 from debtors, cash inflow in operating activities. In creditors, we have to consider purchases here, but you can't just get directly purchases through income statement like that we did in sales, because in the income statement, the purchases is including in cost of sales. So you have to extract purchases from cost of sales. So how to find the cost of sales? Opening stock plus purchases minus closing stock. And here there is no any opening stock, no balances. And your cost of sales is given in income statement 9,900, and closing stock is given in SOFP 1,100. So both together, your purchases are 11,000. So from the 11,000, credit purchaser is still payable as a closing date is 480. So which means within the year we paid 10,520 to our creditors, cash outflow in operating activities. Second one, other income includes rent income 1,000 and FD interest income 400. So altogether, your other income that appeared in the income statement is 1,400. It includes FD interest 400 and the rent income 1,000. So for the FD interest, there is no any assets or liabilities as a closing date, which mean FD interest receivables or receiving advance. So from that, you can identify that total FD interest that relevant to the year is received in cash. Cash. So this 400 you have recording investing activities as cash inflow. But for the rent income in the SOFP, it says rent income receivables as a closing date, 250. So the rent income that relevant for the year is 1,000. From that 1,000, there is still receivable 250. So which means within the year, you only receive 1,000. So that 1,000, you are recording investing activities. So both in FD interest income and rent income that received in cash, you are recording investing activities. Third one, other expenses represent employee and environment compensation. So for this compensation, there is no any assets or liabilities, which means compensations payables and paid in advance. There is nothing about that in SOFP. So which means within the year, the employee and environment compensation that relevant for the year, you paid almost in cash. So you have to record that in operating activities as cash outflow. Fourth one, it says finance expenses includes 25,000 bank charges and the rest is bank loan interest. So the finance charges that appeared in the income statement is 550. So from that 550, 25,000 is bank charges, and that total 25,000 bank charges for the year you paid almost in cash, right? And the loan interest then, the total finance expenses is 550. That includes 25,000 bank charges. So the remaining balance is your interest, and interest is 525. From that 525 as a closing date, there is still payable 120. So which means for the interest you paid 405 for this year. And bank charges and loan interest payments, you are recording operating activities. And for the loan interest, there is a specific place in operating activities. All right. And dividend payments. So dividend payments you have to, you are recording through retained earnings, and also first of all that the profit that you generated, the profit after tax you generated from the income statement, you have to record. You had to transfer to the retained earnings. So 4,200. From that 4,200, there's a still retained earnings balance as a closing date 3,755. So which means the difference of that is the amount that you paid for the dividends for your shareholders. So dividend payment is in finance activities as cash outflow. And that's all for the adjustments. But you have to find out the admin expenses and distribution expense that you paid in cash. And we know that administration expenses includes depreciation, and also distribution expenses includes motor vehicle depreciation. So in this case, the depreciation of each property, plant and equipment is given in SOFP. And first of all, there's no any opening balances. So the whole building, office equipment, and motor vehicle, and all those proper plant and equipment you purchase within this year, right? So the total cost you are recording investing activities as cash outflow. And the depreciation of building and office equipment you are transferring into the administration expenses, and in administration expenses it says administration payable as a closing date. So the total admin expenses that appeared in the income statement is 2,250. From that 2,250, depreciation total is 1,500 and still payable 145. So both these you have to deduct from here to find out how much that you paid for admin in cash. So 825 operating activities. Distribution, distribution expenses in income statement 1,800, and this includes motor vehicle depreciation 600. So you paid for distribution 1,200. So both admin payments and distribution expenses payments you have to record in operating activities as cash outflow, right? And that's it for the direct method. So from those information you have to you can prepare the cash flow based on direct method. And let's see how to prepare the operating activities in indirect, right? So why we are not preparing investing and finance for indirect method? So because there is no way investing activities and finance activities both you have to prepare based on direct method. Operating activities is the only classification, only category that you can prepare both in direct and indirect, right? So the base, when you're finding the operating activities on indirect method, the base that you can use is profit before tax 5,250. Then that is appeared in the income statement. For that, you have to adjust the non-cash expenses, non-cash incomes as and the transactions that not relevant for your operating activities, right? So here, first thing I add here, interest expense. Why? Because interest expense that relevant for the year, it's already recorded as an expense when you are finding the profit. So which means this total interest expense you deducted already and then found the profit. But in the cash flow statements, there's a specific place that you have to deduct the interest. Here, 405 at the bottom. So if we just record this interest payment as in payments here, you deducted interest in two times, double times, because when you're finding the profit, it's already deducted the interest, and here again you are deducting interest, so both times. So to avoid that, you have to reverse the interest expense that you added, you recorded it under when you're finding the profit. So you have to add that to reverse that entry. And here keep in mind, under adjustments, you have to add the interest expense that you recorded in your income statement. And you have to deduct from here the amount that you actually paid for interest as in cash, right? And PP depreciation is non-cash transaction, but when you're finding the profit, it's already deducted because it's an expense. And to reverse that, that's why you are adding here PP depreciation back. Other income, both rent income and interest income, 1,400, it's appeared in the profit. It's included in the profit as in income. But these incomes you have to record in investing activities. So which means these other incomes are not relevant for your operating activities. So you have to deduct the total other income that you recorded in income statement, and then you have to record the interest, sorry, the total other income that received in cash in the investing activities. So here, when you are doing these adjustments, you have to do the adjustments that you are actually recording in your income statement. Huh? Or when you are recording in other places, the relevant places, the correct places, you have to record the cash flows. That's the difference here. And working capital changes, all assets and liabilities were increased because there is no any opening balances. So which means the closing balance is the increasement of current assets and current liabilities. And when the current assets increase, it's an outflow. And when the current liabilities increase, it's an inflow. And that's how you can find prepare the indirect method. So uh, if you've done correctly, the both direct method and indirect method should be same. Huh? Should be the same answers, right? Yes, that's it for this questions. This question, and we'll meet with the other question. And please do comments because from the comments that I know you are actually learning something from me. Or any compliments or any complaints, that doesn't matter. But please do comment and share for others as well, right? And if you want to purchase my books, just drop me a message through my WhatsApp. Okay, let's meet with the other questions. Until that, goodbye.